a guest. Joining us live from Bucharest is Douglas Anderson, CEO of Wall Street Capital, to discuss the impacts of recent developments in global trade. Douglas, thank you so much for sparing your time and joining us here on A News.
Thank you so much. I hope you had a good Bayram.
Thank you so much for that. It still continues, actually. So the Bayram is here, but also we have so much to talk about the global trade. So let's start with that. The US President Donald Trump recently announced sweeping reciprocal tariffs in response to the retaliatory measures from the global trading partners. So how do you think this move will impact global trade relations? And do you believe it could lead to a full-scale trade war?
You know, I don't think it's going to lead to a real full-scale trade war. And the reason why is, you know, the world's changed. The supply chains and markets have focused down so that it's easier for other parts of the world to fill in holes. And the large trading partners are not going to tolerate a prolonged conflict with tariff wars because they could lose those customers, and they can't afford to do that. Take a look at what happened during the pandemic with China. China lost a lot of manufacturing, and that manufacturing never came back because those customers, those clients realized, hey, we're too dependent on these guys, and so I think that they're going to be very, very careful not to prolong this situation and probably try and negotiate their way out of it.
And following up on the previous question then, how can Turkey leverage these global trade tensions and the US's tariffs strategy to its advantage in the current economic climate?
Well, I think there's kind of two ways to look at this. And like, for example, Turkey, you know, Trump isn't just talking about tariffs, he's also talking about trade deficits. And when these countries have huge trade deficits and they're implying tariffs, then Trump is pushing back and saying, hey, wait a minute, you know, we need to get some equalization here. When you look at Turkey, Turkey's got a 75% trade in the opposite direction. So they're importing 75% more than what they're exporting to the US. So I think they're standing on very strong ground to say, hey, we're a good customer of yours. We're interested in opening more to your market. And along those lines, right now, Turkey is exporting textiles, steel, auto parts, agriculture, goods, and this is going to be very interesting, kind of a fine line, because 50% of the cars that are sold in the U.S. are just direct imported. 25% of the cars that are sold in the U.S. are basically assembled there. So the parts are brought in and then they're assembled there. And Turkey's a large part of that. And then about 25% are made in the U.S. So Trump looks at that not only as something that needs to be addressed trade-wise, but also from a national security point of view. You know, if something happened, we would need to be able to make vehicles. And but at the same time, Turkey is standing on good ground in that they're a good customer of the United States, respectively. And so that, again, is why, you know, if China drags its feet, Turkey has a great chance to step up and fill the gap and take advantage there. The other huge advantage that Turkey has is they don't have to go to Brussels for permission to do something. They can make decisions themselves in Ankara. And that's a huge advantage because of the arthritic situation in Brussels, and not to mention the apparent corruption that's there. So this nimble ability of Turkey and Turkey's ability to pivot quickly, they could come out very, very well in this situation.
Well, let's talk about China as well, because recently China suggested that the United States should refrain from emphasizing the hegemony in what is being described as trade wars. How would you characterize the economic interdependencies between the US and China in this context? So
it's very interesting what China's been doing leading up to this situation. They've been busy trying to form what many are calling an Asian Union, much like the EU. They're trying to form that same type of market alliance in Asia. Additionally, the Chinese government has pumped huge amounts of capital, injecting huge amounts of capital in the four top banks in China, enhancing the liquidity so that presumably, hopefully, they'll loan to domestic clients and spur more growth in manufacturing, et cetera. The U.S. is looking at that. And of course, there's a huge trade deficit again. But China absolutely needs the United States as a customer. There's no substitute for it. And so they are going to have to move quickly to come to some kind of agreement on this and some concessions on this. And if they don't, as I said, I mean, countries like Turkey could move in there and eat their lunch while they're screwing around and playing hardball.
Well, you are a businessman and you are looking at the situation from a perspective of a businessman. So I would like to ask you about the perspective of the European nations as well, including the United Kingdom. They have been subjected to Trump's tariffs as well. Which key sectors are mostly affected by these tariffs? And what would you say about the differences between the tariffs on China, tariffs on Europe, tariffs on Mexico, and as such, the tariffs of Canada as well? So when we look at all of these, do you have any distinct differences between those tariffs, or is it just all the same for every country?
No. As I said, I mean, I think he's looking at the trade imbalances, and he's looking at how the U.S. is treated in their country, and what the reciprocity is. Right now, for every one car that's sold in Europe, 8 are sold in the EU. We take 8 of their cars, they buy 1 of ours. And so that seems like a pretty significant imbalance that Trump pays attention to. Canada and Mexico are the largest trading partners of the U.S. And in the case of Canada, it's very much one-sided. We pay for a lion's share of defense and subsidize quite a bit of their quality of living in terms of health care and drug prices and things like that. And in return, we're suffering significant trade barriers and tariffs in a lot of their products, dairy and lumber and things like that. of which we could fairly easily domestically compensate for ourselves. So again, for them to push back on this and not come to a relatively swift some kind of compromise or give, I think would be very unwise for them, because the U.S. has the ability to adjust to that kind of situation.
Well, Douglas, thank you so much for joining us and sparing your time to answer our questions.
Çok teşekkür ederim.
Thank you. Now let's continue with our news.